Assalamualaikum. We student from Faculty of Business and Economic from the course EBW 2103 Financial Institutions, Capital and Money Market. We would like to explain about Capital Market Masterplan 1. First of all, we would like to thank you our course instructor, Dr. Sophie Sulong bin Balia. I would like to introduce myself first. My name is Nur Azurin Shahira binti Zakaria. And in this video presentation, there are also Jason Vitus, Jogery Glenn, Muhammad Fazli, Widalika, Fitriana, and Peldanera. Executive Summary of Capital Market Masterplan 1. The Masterplan for the capital market intends to be detailed plan for the next 10 years, the maps and the strategic locations and potential course of Malaysian capital market. This approach seeks to explain the visions and priorities of the stock market in the phase of development among all the participants. It also seeks to ensure the capital market are strong positioned to play a part in promoting national development needs and ambition and to resolve the external pressure. It also has shown a substantial growth in overall transactions and progress over the past decade and has played a rapidly increasing role in the financial sector. Permission for the master plan was received by the Minister of the Finance, Yang Berhormat Tun Daim Zainuddin, and duly stated by Yang Berbahagia Datuk Mustafa Muhammad, the Minister of Financial too, and Encik Ali Abdul Kadir, the head of the SC, at the annual dialogue of the Security Commission 1999. The framework guide for the strategic and specific is willing to set a strategic plan and a program for a Malaysian potential growth in the capital market. The vision and strategic role. Vision reveal the basic aim promoting the development of the capital market, while strategic role of Malaysia as a vibrant and competitive nation that creating a stable forum for the further growth. It seeks to represent and respond to the needs of Malaysia's long-term stock market, long-term sector, customer, and trader. The goal of a strategy is to maintain the requirement balance between demand and the development to cope with the competition pressure. There are 6 goals have been developed to formulate a policy and plan for the proposal for the major strategy to achieve this vision. The 5 key priorities are focused on capital market is issue, investor, financial institution, market intermediaries, and the overall regulatory structure in the representative field. The 6th priority is to concentrate immediately on the area of strategic advantage that have been assessed as having the ability for the nation play leading international role. This aim is to be chosen center for the fundraising of Malaysian business to foster a productive investment management sector to increase the competitiveness and efficiency of the business institution, to create an environment of strong and sustainable intermediary service. The master plan can be divided into 3 different phases. Phase 1, from 2001 to 2003, expansion of domestic capacity and strengthening of the foundation for expand competitiveness by gradual selective reform and liberalization, with some easing of barrier to entry into some part of the capital market to speed up the growth of this sector. Under Phase 2, from 2004 to 2005, progressive and steady extension of consumer access by removing obstacles to entry into other sectors of the financial market by increasing the scale and quality of service and infrastructure. Okay, lastly, Phase 3, from 2006 to 2010, pursue more expansion strategic to become a mature capital market and establish a regional attractiveness and comparative benefit roles. My group member will explain more about this phase later.
Next, I will present on the Capital Market Masterplan 1, Chapter 1, the Introduction. Capital Market Masterplan is defined as a comprehensive planning on the process of charting and strategic positioning and future direction of Malaysian capital market for the next 10 years. The example of capital market are stock market and bond market. Capital Market Masterplan helps the capital market to become more stable in Malaysia. It is intended to provide strategic guidance to market participants as to the strategy and priorities of the capital market amid the changing marketplace. Next, we proceed with the background. Due to the rapidly evolving domestic international climate of the world capital market, Malaysian capital market have faced many challenges which have pointed many key factors for ensuring that capital market continue to have access to an equal, successful and robust domestic securities market under this competitive condition. There are three reasons and terms of reference for market plan, which is to develop a vision and program to enhance Malaysia's capital market growth, develop a mechanism and framework for effective chain of action for the further free trade and loosening the economic restriction and identity, and chart the path for capital market of Malaysia in terms of the strategic positioning and both domestic and external Malaysian capital market. Next, we will proceed with the presentation on the approach and consultation process. In 1999, to improve the progress of Masterplan, a committee called Capital Market Strategic Committee (CMSC) was formed. This committee was consisting of high-caliber people from Securities Commission and other public sector. The CMSC has done a few programs to facilitate the development of Masterplan. For example, in the October 1999, CMSC has launched their official website to share info and collect public opinion on the master plan and conduct a press statement. Next, we will proceed with the master plan final report. The master plan offers a concise description of the strategic philosophy that underline capital market growth activity for the next 10 years and describe the action plan that incorporates specific suggestions for the future growth of capital market. The role of a vibrant and competitive capital sector in general in promoting effective capital accumulation was highlighted as a crucial component for the objective of the master plan. This leads to a completion to the other chapter of master plan, which is trend and challenges, vision and strategy, recommendation and implementation of framework. Next, we proceed with Chapter 2, Trend and Challenges, for the trends of capital market only. For the growth in fundraising capacity in equity market. In 1980s and early 1990s, the equity market has improved in significant development were made to capital market microstructure. The rapid succession of structural improvement, especially in trading, clearing stock and settlement system, were focused on building capacity on the equity market. In 1988, the second board was launched and gave greater momentum in a few years. During Super Bull run, it was increased rapidly in liquidity. For the bond market, in 1992, the issuance of long-term bond was required to have valuation of at least BBB and short-term paper with valuation of at least P3. In January 1996, all unlisted PDS had to be removed without access to promote more efficient trade and settlement, with the central bank acting as the primary depositor and payment agent. The development of efforts, the National Bond Market Committee (NBMC) was formed in 1999, consisting of senior representatives of MOF and relevant regulatory bodies to provide policy direction and rationalize the regulatory framework for the expansion of ringgit bond market. Next, we proceed with the expansion of capital market product and service. for the investment of management industry, investment management funds in Malaysia, which consists of funds managed by saving and pension funds, unit trust management companies, and unit trust management companies, as asset management companies and insurance companies. The institution collectively raise funds worth around RM 280 billion, while the banking sector managed around RM 560 billion at the end of 1999. The unit trust funds was first introduced in Malaysia compared to other markets in the region. The first unit trust fund in Malaysia was established in 1959. However, for the next 20 years, only 5 new unit trust companies were established, the total of 18 funds. Next is derivative market. The line of development for the derivative industry effort have been made to foster a conducive environment to the more effective use of derivative product. The Regulation Securities Borrowing and Lending (SBL) were introduced in December 1995, while regulated the short selling (RGS) were enacted from September 1999 onward. The next is Islamic capital market. The emergence of the modern Islamic financial in Malaysia is relative in development compared to the more sustainable financial system. The first Islamic bank, Bank Islam Malaysia, was established to provide financial service in accordance with Islamic principles. Although the nature is still new, the domestic market Islamic market was grown slowly but steadily over the past few years. In 1990, Shell MDS Sdn Bhd issued the first private sector Islamic bond of RM 125 million. Many of the largest companies in the country, such as Petronas, Tenaga Nasional, and Telekom Malaysia, has secured financing and issuing long-term corporate debt using Islamic-based instrument.
In chapter 2 also have challenging the challenge of the capital market, which is we have provide 3 challenge of the capital market in Malaysia. The first is lingering effects of the regional financial crisis. The second is meeting of growing economy, and the second is heightened global competition in business and investment. We start. The first is lingering effects of the regional financial crisis, which is the first decline in international competitiveness. The first challenge of the capital market is lingering effects of the regional financial crisis. So the first is decline in international competitiveness. We can see that from the table 1, since the financial crisis in 1987, Malaysian capital market has dropped in international outstanding. We can see the market capitalization of the KLCE, the Kuala Lumpur Stock Exchange, was fall from ranking 11 out of 45 international equity market in 1996 to 23 ranking in 1997. We can see the competitiveness in the worldwide because of the financial crisis. Before this, Malaysia was ranking in 6 in 96 with the market capitalization of less than half US dollar and become the third largest stock of market capitalization among non-major in Asia Pacific. So the liquidity levels of KL or FEE and COMEX significantly lower than international derivative exchange, consistently 50 to 55 range in 1997, then 59 derivative exchange in worldwide. The continued perception Malaysia has highly risk premium is due uncertain about the extent policy and corporate risk and the effect of the market competitiveness. However, emerging aspect of these perceptions from the economy have a result in correct information. So, in cases to confirm by international financial institution, to reforms bank instruction have outpaced previous expectation and reforms the other crises. The second is slow recovery in the capital market. The ability market to attract investment has been important factor to successful development over the years. So we can see the trends of the capitalizations, as my friend explained it. So the equity market depends on combination the adequate scale and liquidity to attract the valuations. So the reasons maintaining the aspect become a challenge to Malaysia to maintaining the equity markets. To sensible the capital markets. In the domestic market also, liquidity increasingly significantly in 1990 with trading sharply increasing in international interest. The annual trade more than 230 of nominal GDP in 1993 of the super bull run, but changed afterwards, falling 40% of the GDP in 1998 because of the financial crisis. So the 1999 review that increased slightly to more than 60% GDP, but still far below in 93 to 1997. So the financial crisis give effect to market capitalization. The second in meeting needs of growing economy is employment and knowledge development needs. The capital markets contribute directly to the country economic growth terms in employment in income tax. So demand of highly skilled workers industry to continuous increase in human capital and support structure to create competitive market is to develop both capital market and knowledge-based economy. So Malaysia needs a highly skilled human research to leverage in terms of technical financial skill needed to receive high value-added jobs. To attract these skills, generate incentive for commercial-oriented innovations. They must be energetic and develop capital market. So expected to highly skilled employees will attract markets and institutions to offer dignity, opportunity, rewards, and living standards. A market aspiring to attract a skilled workforce and only needs offered necessary vacancies and fiscal incentive, and the class of employment that can give them the opportunity, development, what they're looking for. So because of this, the challenge is Malaysia does not have capital needed to develop through its own residents. It also needs to achieve sexually critical amount in this profession in the capital market. So related to knowledge development, market promotion for risk capital and the facilitated environment for the companies with higher growth will help maintain strong innovations location in Malaysia. So for example, venture capital market usually not only provides funds to the investment companies but also provide in strategic planning, business management, and knowledge research. There are additional profits for investment companies that will give benefits to wider sector at the economy world. At the same time, level of profession expertise in capital market needs to further enhance and develop support overall growth of the capital market. The third challenge in the capital market is heightened global competition for business and investment. The first is usage of technology and innovation. So advance in technology and innovation gives challenging when the existing market structure and institution. So exploiting technology by new entrants to create a new distribution channels and transactions to get cost efficiency and gain advantages
to inefficiency and supply gap markets. So financial service uses the more option to bypass traditional market intermediaries. Market intermediaries also introducing new and more innovative ways of producing, distributing, and accessing financial products to maintain their customer. The use of internet in the capital market give a drastic change in investment landscape in many markets. For example, US, Germany, Korea had rapid growth in online trading, which prove this medium is give a place more to direct growth in managing their financial portfolio. The main reason the rapid growth, the ability of online trading to take advantage is of cost of saving by internet technology and offer commissions rates than traditional food service. Traditional food service also has need to do in manual ordering than online trading. So we can see the cost of saving is saved when we use online trading. So the second is development of specific value-added area of the capital market. As move higher in value chains, they are increasingly focused on specific offer great potential value to the market. They can gain competitive advantage. The exchange increasingly from non-profit to profit-oriented concerns. They are looking to reduce the cost and find new business opportunity through different themselves. So the one ways some market place themselves in the form of strategic partnership with other markets, which have more broad-minded markets to strengthen their role and influence in their own region. Other than that, the rapid progress made by many countries to grow to venture capital industry. For example, India is one of being active in this venture capital market. Exchange the compete aggressively to maintain the increased liquidity by attracting the best quality listing, especially biomedical and technology sector.
For this chapter 3 in the CM Masterplan 1, I'll be explaining about the vision and strategy. The first part will be the vision. Malaysia was envisioned to develop their capital market to a state of internationally competitive, holding a strong levels of efficiency, innovation, and productivity. We know that Malaysia, the capital market for Malaysia, needs to be internationally competitive in all core areas necessary to support Malaysia's basic capital and investment needs, as well as its longer-term economic objectives. The second one is that it must be highly efficient conduit for the mobilization and allocation of funds. The last one will be, it must be supported by a strong and facilitative regulatory framework that enables the capital market to perform its functions effectively and provides a high degree of confidence to its users. Moving on to the next part is the objectives and strategic initiatives. There are 6 main objectives in this master plan. The first one would be to be the preferred fundraising center for Malaysian companies. And the next one is to promote an effective investment management industry and a more conducive environment for investors. The third objective is to enhance the competitive position and efficiency of market institutions. The fourth one is to develop a strong and competitive environment for intermediation services. Moving on to the fifth one, it is to ensure a stronger and more facilitative regulatory regime. And the last one is to establish Malaysia as an international Islamic capital market center. And moving on to the next part, which is the objectives and the strategic initiatives. The first objectives will be to be the preferred fundraising center for Malaysian companies. Under this, there are 4 strategic initiatives that can be found. The first one is to enhance the efficiency of the fundraising process. Next, to implement a comprehensive program to develop the corporate bond market as a competitive source of financing. Next is to facilitate the development of the venture capital industry to finance emerging high-growth companies. Last but not least, foster a liquid and efficient market for the secondary trading of securities. For the next objective, to promote an effective investment management industry and a more conducive environment for investors. Under this, there are 5 initiatives. The first one is to develop a strong framework for corporate governance and shareholder value recognition. The second initiative is to heighten efforts to establish a vibrant and competitive investment management industry. The third one is to enhance the role of institutional investors in the provision and management of funds. Next is to facilitate effective risk management by actively developing the derivatives industry. And the last initiative for this objective is to facilitate the introduction of a broad range of capital market products catering to various risk-return profile. Moving on to the third main objective, to enhance the competitive position and efficiency of market institutions. There are 3 initiatives that can be brought upon these objectives. The first one is to restructure Malaysian exchanges and clearing institutions to strengthen their efficiency and competitiveness. Second initiative is to ensure Malaysian exchanges are well positioned to respond to changing market dynamics through the adoption of flexible business structures and commercially oriented strategies. And the last initiative for this objective is to enhance the efficiency of the trading, clearing, and settlement infrastructure. Okay, moving on to the next part of the objectives, which is to develop a strong and competitive environment for intermediation services. Under this, there are 4 initiatives that was found. The first one is to foster constructive competition through the deregulation of services, products, and fixed fee structures. Next initiative is to develop strong full-service brokers to provide a competitive market for integrated financial services. The third initiative is to ensure Malaysian intermediation services are anchored on appropriate prudential standards with high levels of business conduct and professional skills. And last initiative under these objectives is to adopt a pragmatic program for liberalization supported by appropriate safeguards. Moving on to the 5th main objective, to ensure a stronger and more facilitative regulatory regime. Under this objective, there are 4 initiatives. And the first one would be to move towards a market-based system of regulation for capital markets activities. And the second one is to ensure regulatory parity and consistency between all institutions and participants in conducting similar capital market activities. And the third initiative is to ensure strong enforcement of the regulation governing the capital market. And the fourth initiative is to enhance capacity for maintaining systemic and financial stability. Okay, for the last main objectives, which is to establish Malaysia as an international Islamic capital market center, there are 4 initiatives that can be found. The first one is to facilitate the development of a wide range of competitive products and services related to the Islamic capital market. The second strategic initiative is to create a viable market for the effective mobilization of Islamic funds. And the third one is to ensure that there is an appropriate and comprehensive accounting, tax, and regulatory framework for the Islamic capital market. And finally, the last strategic initiatives for this last objective is to enhance the value recognition of the Malaysian Islamic capital market internationally. That is all from me.
Hello, my name is Pearl. I'm gonna present to you about the recommendations. The first recommendations is the market institutions. Under a more competitive and dynamic industry environment, keeping globally competitive is a major challenge facing by market institutions in Malaysia. So how can be recommended so that the market institutions can face their challenges in Malaysia? A single Malaysian exchange should be established through the consolidations of all existing exchange. Over the past 3 years, mergers among some Malaysian market institutions have been a marginal decrease in the number of exchanges. In order to better match their respective business growth plans with the securities and futures market, and to promote efforts to strengthen their overall competitive in line with the development in other jurisdictions, the remaining exchange in the country shall combine into a single Malaysian exchange. The establishment of a single Malaysian exchange will allow more coordinated approach to product development, investors education and market promotion, and we would allow more focused and consistent procedure to technology investment. Second, number 2 is that feasible for a unified exchange to tap substantial economies of scale by saving the administrative costs of maintaining a variety of exchange as well as economies of scale in order to deliver a wide range of product and services. And the third one is the enable efficiency gains from the potential future integrations of the diversity of the system and processes currently present in the domestic exchange market. The second recommendation is regarding equity market. So over the past 2 decades, the equity market has seen considerable growth, during which a range of important reforms have played a role in making it a major financing avenue for Malaysia's corporate sector. Okay, we need to promote the participation of a local institution investor in venture capital funds. Investment in unquoted firms in many countries have historically been the domain of venture capital companies and investors with high net worth. However, institution funds, mainly through investment in private equity funds, are increasingly become a key players in the field. So I will take US economic as an example, okay? Over the 50% of venture capital or private equity assets in US comes from institution public and private pension fund. The rest of the asset in the US comes from the foundations, bank, insurance firms, individuals and other organizations looking to diversify their portfolio with the class of investment. Although the actual percentage of institutional investment, private equity investment remains very small, this has led to an absolute influx of record amounts of money, especially in the high-growth technology market. This has helped propel US economic growth in recent years. Okay, in Malaysia, contribution by provident and pension fund, insurance funds, unit trust, asset management companies and other institutional investors in unlisted private equities continue to be limited due to some degree to a limitation placed on such investment. At the same time, there is a general conservatism and a lack of knowledge of the advantages of such investment within such institutions. Given a large volume of funds owned by these institutions and the significant role they play in managing private funds, investment in high-growth corporations, unquoted securities would enable them to further diversify their portfolio and raise portfolio returns. Okay, to encourage more efficient, investors should be relaxed, subject to the reasonable prudential condition. Furthermore, in SC, in collaboration with participants in the venture capital industry, will conduct projects to increase awareness among the directors of this fund and companies of the investment opportunities. We go for the third recommendation. The third recommendation is regarding the bond market. Okay, the domestic bond market in Malaysia can trace its roots to the government's dependence on bond issue in the 1970s to meet the bulk of significant financial needs demanded at the time by the economic growth agenda of the country. As government spending increased, so did the volume of outstanding government bonds, which grew between 1970 and 1985 at an average rate of 70%. A shelf registration scheme for the issuance of corporate bonds will be introduced. Okay, it is incredibly critical that the companies can serve their funding needs in the fastest and most cost-effective way possible. Okay, shelf registration scheme allow an expedited bond issuance process and are widely accepted as having the following advantages, which at the same time of the issue, investors will be able to obtain much simpler and more oriented offering document. Secondly, cost saving with the regular issuer. Thirdly, decrease in the rate of work required at the time of the sum concerned by the company and its advisor. And lastly, minimization of the time taken to process document affecting the problem. Shelf registrations will require the issuer who needs to comply with such eligibility criteria to file a shelf prospectus containing all pertinent material pertaining to the issuer and the issuing of the SC bonds. However, the shelf prospectus would not include specific of the securities price and the total amount of securities, the payout plan, and also the yield. The shelf prospectus will have the validity period of up to 2 years from the state of debt issue with the shelf prospectus. The issuer will be required to apply the SC of the supplementary shelf prospectus for the registration to ensure that the details presented by the issuer in the shelf prospectus remain current during the validity period and prior to any actual bonds issuance. Okay, this supplementary prospectus shall provide sufficient details to ensure proper disclosure of any significant developments in the issuer status or concern after the filing of the shelf prospectus. The purpose of this supplementary prospectus is basically to include the information not contained in the shelf procedures. This covers the price at which the bonds will be sold, the amount of bonds to be issued and yield, the coupon rate or profit, and the financial plan of the bonds and the offer period for the issuance of the bonds. Recommendation is regarding derivative market. Currently, the Malaysian exchange traded activities derivative market consists of KLCI futures and index option traded in KLOFFE as well as CPO futures and 3 months CLIBOR KLIBOR futures traded in COMEX COMMEX. Until recently, only commodity futures listed of the former KLCE, which opened in 1980s, is limited to the derivative market in Malaysia. So how we can recommend it? KLOFFE and COMEX should actively pursue the introductions of more derivative products. Malaysian derivative exchanges need to closely consider their present long-term status and policy. As such, are urged to explore the future productions of risk management instrument aggressively. This may involve the introduction of products such as investors in Sharia declaration that this may involve the introduction of product such as investor Sharia approved counters, yes, that cater to niche sectors of the investing public. In this respect, the SSC's declaration that from the Islamic point of view, the systematic principle of index future is appropriate opens up possibilities for exchange to pursue the potential listing of Islamic derivative. It is also necessary to research the possibility of incorporating stocks options and tailored regional and international derivative products. The future overall of regional and industry product will help to draw more foreign investment in Malaysia derivative industry and to lift the profile of Malaysian capital market internationally. Such product will also appeal to investor who wants to be exposed to regional price fluctuations without having to participate directly in those markets themselves, thus reducing some of the capital outflows tendency to better performing markets. The next recommendations is regarding Islamic capital market. The Islamic capital market in Malaysia serve as a part of wider capital markets for investors and issuers and play a crucial role in the broadening and expansion of Islamic financial sector for Islamic banking and takaful insurance. Okay, what is the recommendations? Efforts to increase the pool of Islamic capital market expertise through training and education will be enhanced. Okay. In promoting the aim of positioning Malaysia as a foreign Islamic capital market, human capital represents an incredibly significant factor. The secret to maintaining a sustainable advantage as a competent and professional workforce, therefore, to ensure the availability of a pool of qualified professionals who are well versed in Sharia concern, who are willing to deliver a variety of appropriate high quality, value added advice and intermediation services, it is important to build local expertise. Via SIDC and in cooperation and trained institutions such as the local universities and the BIMB, Research and Training Institute, BIRT, in developing resources, the SC will undertake and integrate efforts to provide training to improve the technology, expertise and skills of professionals working in Islamic capital sector. In order to allow market professionals, issuer and investor to keep up with the latest trend in the Islamic capital market, SIDC will arrange frequent seminars and conference and other among aspects. At the international level, the SIDC will also take steps to organize mutually beneficial education program in cooperation with the teaching institution in other Muslim nations. This initiative will raise both domestic and international understanding with the niche market sector and promote dialogue between Sharia scholars and professionals working in this field with the exchange of ideas. At the same time, to further strengthen pool of experts within the Islamic capital market in Malaysia, the availability of legal professionals and judicial officers who are familiar with Islamic financial transactions will be approved. Training and education initiative to develop up qualified legal professionals with the requisite technical skills to manage Islamic financial cases within the judiciary system will also be undertaken. In this respect, the SIDC will cooperate with the Institut Latihan Kehakiman dan Perundangan (ILKAP) to provide these professionals with adequate training.
Next is stockbroking industry. Over the years, especially in the last decade, the Malaysian stockbroking industry has seen considerable growth. However, when market collapsed in 1987 to 1998, it had negative effect on stockbroking firms, especially those with smaller capitalization, limited risk management, and inadequate internal controls. Substantial measures have since been enacted to greatly improve the sector as a whole and to instill a stronger sense of financial discipline in brokers. The recommendation is, commission sharing arrangements between remitters and stockbroking companies will be fully negotiable in 2002. Currently, commission received on deals by remitters and retail investors must be split at 60-40 ratio between stockbroking firms and remitters. The deregulation of the mechanisms for the exchange of commission will allow remittances to receive commissions that are sufficiently representative of the quality of the services provided, and provided them with an additional opportunity to develop their services. That will also be aligned with larger attempts to build a market that is more competitive. In accordance with the liberalization of brokerage commission rates, full flexibility in negotiating the sharing of brokerage commissions would now be permissible for stockbroking firms and remittances. The next industry is investment management industry. To a large degree, the effective intermediation of funds by the investment management industry determines how efficiently the capital market mobilizes and assigns capital in the economy. In this respect, an efficient investment management industry is a symbol of an efficient and globally competitive, well-developed capital market. A successful investment management industry is important in the sense of the Malaysian capital market for more successful mobilization of domestic savings. The main recommendation for investment management industry is more market-based approach to regulation will be applied to the investment management industry. With the development and sophistication of the investment management sector, there will be a growing need to look at the continued efficiency of current regulatory approaches in achieving the key objective of such a policy, while at the same time promoting more progress in developing services and products powered by industry. In view of these concerns, broad rules based on guidelines are preferred over prescriptive rules, particularly about the control of products and behaviors. Similar to the full DBR system, the use of broad industry regulation standards offers a flexible framework that promotes creativity while offering sufficient regulatory and market-based incentive for good governance and the security of investors. Therefore, the use of broad standards to govern market activity and prudential demands will offer consistency by not undermining the overall soundness of the sector. The imposition of fair regulatory treatment on all participants, providing comparable facilities, will then be streamlined and encouraged, and more cost-effective legislation will be made possible. The next is corporate governance. Corporate governance is the process and framework used to steer and control of the company's operations and affairs to enhance business prosperity and corporate responsibility, while considering the needs of all stakeholders with the aim of realizing long-term shareholder value. A world-class capital market must have a corporate sector that is open, responsible, and performance-oriented, focused on clear and effective business activity management. Good corporate governance, more succinctly put, is key to ensuring that the Malaysian capital market provides investors with a favorable environment. The recommendation for the corporate governance is the guidelines were further split into three separate sections. First, the Malaysian Code on Corporate Governance. The code is a self-regulatory approach encompassing sound corporate governance standards and best practices for corporations, investors, and auditors, and lays down the necessary prerequisites to promote compliance with its recommendations. This effort, led by the private sector, facilitates a more responsive and proactive approach to increase corporate governance standards to supplement the more stringent responses needed under the statute or regulation. The second is reform of the laws, rules, and regulations. The report examines areas within existing laws, rules, and regulations where statutory or regulatory reform is required to update them with current commercial reality as well as with corporate governance principles that are globally recognized. In the following regions, substantial changes to the laws and legislative system have been recommended. Firstly, sufficiency of disclosures and conflict of interest in relation to transactions concerning company asset waste. Secondly, enhancing the efficiency of general meetings. And the last one is establish efficient mechanisms of governance and regulation within the regulatory framework. The third guideline is training and education. The report identifies the instructional and training need to raise knowledge among directors, secretaries of corporations, members of audit committees, and investors of their respective roles, obligations, responsibilities, rights, and responsibilities regarding corporate governance and the implementation of the code. Next is the regulatory framework. Significant developments have taken place in the regulatory structure of the Malaysian capital market over the last decade, especially since the formation of the SC, which is Security Commission, in 1993. Efforts have been made to streamline laws and to amend and introduce new legislation and regulations. This initiative aims, among other things, to enhance the functioning of the primary and secondary markets, to explain and reinforce the framework for the different operations of capital market, and to promote the widening of the reach of the market. The main recommendation for regulatory framework is efforts to create a single licensing regime and consolidation of securities and futures legislation will be pursued. Malaysian security law requires licensing by the SC of the separate types of stock market intermediaries. Although technology and competitiveness which eventually contribute to some disintermediation, capital market regulation should be done by understanding the value of financial intermediation, and the regulatory framework should not interfere with the capacity of intermediaries to play that function. The exact functional scope of the position of intermediaries in this regard can essentially be decided by competing market forces. The SC will also examine the feasibility of consolidating, for the longer term, the various securities and futures regulations into omnibus capital market legislation to further improve legal clarity in the care of investors and transactions in the capital market. Consolidation of securities and futures regulations will help promote the implementation and interpretation of the law by all capital market players, ensure efficient and coherent control, and facilitate increased oversight and compliance of the capital market, considering the growing interconnections that are becoming prevalent through capital market products and activities. Next is the technology and e-commerce. In several aspects of the capital market, developments in information technology (IT) and the resulting growth of e-commerce are causing big shifts. These developments influence the functioning and development of markets, the positions and relationships between exchanges, traders, and investors, and the scope of transactions for products. In particular, emerging developments are contributing to the emergence of new competitive models, encouraging cost savings, enabling more market productivity, and facilitating market access. At national, regional, and global levels, the fundamental effect of the Internet on the capital market has played a key role in creating substantial new opportunities and challenges for market participants. The main recommendation for technology and e-commerce is capital market regulation will be technology neutral and facilitative of innovation. A constructive approach to the development of the use of technology and e-commerce in the Malaysian capital market will be adopted in line with the national agenda of pursuing technology and e-commerce development. In order to improve regulatory transparency, the SC, in consultation with the appropriate authorities, will review and update regulatory requirements, thereby promoting the advancement and application of technology in all aspects of the capital market. Regulation will be natural in terms of technologies and forward-looking. The SC will ensure that the lawful use of technology by market participants and market is not unduly impeded, in keeping with the basic principles of securities regulation. The purpose of the regulation will be to ensure that the market functions in a fair, cost-effective, and productive manner. The last is training and education. The presence of human capital is essential to Malaysia's development of a world-class capital market. Access to broad pools of highly trained and effective human resources improves the Malaysian economy's productive potential and is crucial to the growth of its service industries, such as the capital market. In this respect, the Malaysian capital market already has certain basic advantages. However, the biggest challenge of going forward is to ensure that the quality and strength of the human resources available remain adequate for the capital market to compete successfully in a world that is highly globalized and competitive. The main recommendation for training and education is training program to create highly skilled and flexible market professionals will be developed. The training programs will be structured to promote the growth of the specialized skills needed to address the potential needs of industry and to allow new entrants to learn market-relevant skills. In doing so, the purpose of the SC will be to create a framework for the implementation of such training programs, considering existing human capital shortage, as well as initiatives to promote collaboration and ties with related national and international training bodies. Training programs will also be built within the framework for the current pool of specialists in the capital market to undergo training and redevelopment to satisfy the demands of an increasingly competitive market. These efforts will be integrated and streamlined with those of all key market players, including market institutions, business associations, and professional bodies, in order to ensure that all facets of capital market education are delivered and to include preparation for particular market target groups. That's all.
Hi everyone, I am Wirida and I will be explaining about Chapter 5 of Capital Masterplan 1, which is the implementation framework. In this chapter, we will be learning about the implementation process, the structure and responsibilities of the involved parties, the implementation plan and phase, performance monitoring, and communication program. This slide shows the process of implementation of Capital Masterplan 1. In the implementation process, the Securities Commission, or in short, SC, will be the one to keep an eye on the overall progress. Differences in the benchmarking of the progress and the predetermined measures of performance will be analyzed and highlighted for further action. The progress report will then be uploaded on the SC website for the public to view it. However, the implementation of the recommendations might be influenced due to the speedy evolution of Malaysian capital market. To overcome this problem, the recommendations have to be assessed and updated consistently in order for it to be applicable for a long time. Next, we will be looking into the 3 phases of the implementation. In the first phase, It is important to strengthen the domestic players, build market capacity, increase efficiency and competitiveness, while also exploring chances that might add value to the strategies. It is also important to be committed in upgrading skills of local expertise while also strengthening the regulatory framework. At the same time, greater motivation is needed to accelerate the development of developing sectors in an orderly and harmonized transition because there will be relaxation of specific barriers to entry. In the second phase, further development of services and facilities in selected strategic niche in terms of its quality will be made in order for it to be on the same level as the international standards. The core segments of the capital market will also be strengthened through continuous effort, where it is important for greater liberalization. Opportunities will continue to be explored for mutually beneficial strategic connections. It is also important in this phase to also further strengthen the market infrastructure. As an example, creating an integrated trading platform for various product segments. In the third phase, the focus will be on promoting and further amplifying the regional and international profile of the Malaysian capital market, and also on recognizing and developing new areas of comparative and competitive advantage, contingent on periodic assessment of market readiness and prevailing conditions. Other than that, this phase will also focus on surpassing the current efficiency and integrity of a market on a further level, along with the goal to achieve end-to-end STP. In this slide, we will be talking about the performance monitoring. It is important to keep a look on the performance in terms of the timeliness and the effectiveness of the implementation to make sure that the objectives of the master plan is achieved. In terms of the timeliness, if there is any delays in implementing the recommendations, their effects on the other dependent recommendations will be taken into account. In terms of the effectiveness, specific measures will be established in realizing the objectives and strategic initiatives of the master plan. Performance indicators to assess performance for specific sections of the capital market as well as for the capital market as a whole has been identified by SC. For the specific capital market sections, specific measures used to evaluate the performance includes the profile of issuers, intermediaries, market institutions, and investors. Other than that, it also measures the size of funds raised, efficiency of the regulatory process, and the product range traded in various markets. For the capital market as a whole, the specific measures will be the size of contributions of various sections relative to the overall capital market. This includes the trading volumes, market capitalization, the execution costs, and the number of listed companies. For each of these measures, targets will be set and benchmarked against the actual performance by the implementation task force. For the last section of this chapter, we will be talking about the communication program. One of the main objectives of the communication program is to generate consciousness about the objectives and strategic initiatives of the master plan among the related parties. Other than that, the objective is to develop clear communication and feedback channels between relevant groups that has the same interest. It also makes sure that the updates on the implementation progress are distributed in a timely and stable manner. And the objective is also to increase the visibility of the process while also ensuring the accountability of the parties. In this program, the parties are the ones that are both directly and indirectly influenced by the recommendation. For example, the general public, both domestic and foreign investors, local and international media, professional bodies, market institutions, and so on. The communication can be made through methods such as the SC website, press releases, seminars, forums, briefings, conferences, and guidance notes. To acquire feedbacks from the market participants, consultation papers will be issued by the SC before commencing the implementation of recommendations in the master plan. That is all from me. Thank you.